Hi, the average guy here. Welcome back to another video. Before we begin, I just want to remind you that I am not a financial advisor. Everything in this video is based on my own experience, research, and personal opinions. Always do your own research before making any financial decisions. Now let's get started. Imagine you have two friends. One spends every evening looking for the next cryptocurrency that could make them rich overnight. The other quietly invests a little money every single month into simple index funds. 10 years later, who do you think is more likely to have built real wealth? It might surprise you, but in many cases, it's the second person. Today, we're talking about why rich people often love boring investments. When most people think about investing, they imagine excitement, buying the next big stock, finding the next Bitcoin, doubling their money in a few weeks. That's the dream. But real investing usually looks very different. In fact, it can be incredibly boring. And that's exactly why it works. The wealthiest investors in the world rarely spend every day chasing the hottest trend. Instead, they focus on consistency. They understand something that many beginners don't. Getting rich slowly is much easier than trying to get rich quickly. Let's start with one simple question. What is a boring investment? A boring investment is something that probably won't make headlines tomorrow. It isn't exciting. It doesn't promise huge returns overnight. Examples include broad index funds, diversified ETFs, retirement accounts, and long-term investments held for many years. Nothing glamorous, nothing exciting, just steady progress. So why do wealthy people like them? Because they understand the power of compound growth. Imagine planting a tree. You don't expect fruit the next morning. You water it, protect it, give it time. Years later, that tree produces fruit season after season. Investing works in much the same way. The earlier you start, the more time your money has to grow. Albert Einstein is often credited with calling compound interest the eighth wonder of the world. Whether or not he actually said it, the principle is still true. Your money can eventually begin earning money for you, and then that money earns even more money. This process is slow at first, almost disappointingly slow. But over many years, it becomes incredibly powerful. Here's another reason rich people prefer boring investments. They don't waste energy trying to predict the future. Nobody knows which stock will be the best next year. Nobody knows exactly when markets will rise or fall. Even professional fund managers often struggle to beat the market consistently, instead of trying to be smarter than everyone else. Many wealthy investors simply buy the market itself. Then they keep investing, month after month, year after year. Now let's talk about emotions. This is where many investors fail. The market drops by 10%. People panic. They sell everything. A few months later, the market recovers. Then they buy back in at higher prices. They've done exactly the opposite of what they should have done. Successful investors understand that markets move up and down. That's normal. Temporary declines are part of investing. They don't see them as disasters. They see them as part of the journey. Think about your favorite supermarket. If your favorite product suddenly goes on sale, you don't complain. You're happy because you can buy more for less. Yet when investments become cheaper, many people become afraid. It's an interesting psychological difference. Another thing wealthy people understand is diversification. Imagine putting all your money into one company. If that company fails, you could lose everything. Now imagine owning tiny pieces of hundreds or even thousands of companies. If one struggles, the others continue working. That's one reason diversified investing has become so popular. It reduces risk while still allowing your money to grow over time. Let's be honest. Boring investing isn't exciting. You probably won't tell your friends at dinner that you bought another index fund today. Nobody posts screenshots on social media showing their investment quietly growing by a few % each year. But that's exactly why it works. It removes emotion. It removes gambling. It removes the constant need to guess. Instead, it rewards patience. One of the biggest mistakes beginners make is constantly checking their investments. Every day, sometimes every hour. Imagine planting a tree and digging it up every weekend to see if the roots are growing. It wouldn't make any sense. Yet many people do exactly that with their investments. Long-term investing requires trust. Trust in the process, trust in consistency, and most importantly, trust in time. Another lesson rich people understand is that investing isn't about becoming rich next year. It's about giving yourself more choices in the future. The choice to retire earlier, the choice to work less, the choice to help your family, the choice to enjoy life without constantly worrying about money. That's what wealth really provides. Freedom, not flashy cars, not expensive watches. Freedom! If you're just getting started, don't worry about finding the perfect investment. Focus on building the habit first. Invest regularly. Keep learning. Stay patient. Ignore the daily noise and let time do most of the hard work. 'Cause here's the truth. Investing should actually feel a little boring. If your investments make you feel excited every single day, there's a good chance you're taking more risk than you realize. The most successful investors aren't usually the smartest people in the room. They're often the most patient. They keep showing up. They keep investing. And they keep thinking decades ahead instead of days ahead. If there's one thing I hope you remember from today's video, it's this. Building wealth doesn't require excitement. It requires consistency. The simple habits you repeat for years will usually outperform the exciting decisions you make for a few weeks. So don't underestimate boring investments. They may not impress your friends today, but they might completely change your future. If you enjoyed this video and found it useful, consider subscribing for more simple money tips. This is the Average Guy. Thanks for watching, and I'll see you in the next one.